Okay, so in this particular video, we will now move on to the problem number 2. I'll start reading the problem. The Taj Limited was formed on 1st April 2013 to take over the business formerly carried on by Messrs. Brown and Smith as from 1 January 2013. It was agreed that all profits made subsequent to this latter date should belong to the company, but interest on the purchase consideration Rs 50,000 at the rate of 6% per annum should be paid to the vendors until the final settlement, which took place on 1st of June 2013. Okay, so there are little extra adjustments that are given in this particular problem with respect to the settlement date and with respect to the interest that the purchaser is supposed to pay to the vendor. Okay, so let us try to understand what is exactly happening in this particular problem. Okay, so here they are saying that to take over the business on 1st of January 2013. So date of acquisition is 01/01/13. This is the date on which the business is been acquired. Now then we have the business is formed on 1/4/2013. Business is formed means on this date they got the letter of incorporation. So I write here that is on 1/4/13 incorporation date. Okay, here I write acquisition, and then if the year is starting on 1st of January, that means it will get over on 31st of December 2013. Okay, this is the entire financial year. On this date the business is being acquired, here the business is being incorporated, and here the financial year is getting over. Now what additional information is given here is that there is some settlement between the vendor and the purchaser with respect to the interest that is to be paid to the vendor. Okay, see, Taj, I write here, Taj is a new business. Taj is a new business, right? This business was acquired on 1st January 13 from whom? From Brown and Smith. Okay, this Taj, which was new business, was acquired from Brown and Smith, and obviously Brown and Smith, if here is a vendor, they must have not sold it for free of cost, right? They must have sold the business for some amount of purchase consideration. Now some settlement with respect to this consideration was left, and it was completed on 1st of June 2013, which happened here. That is 1st of June 13. Okay, some amount of settlement with respect to the interest that is to be paid happened over here. So what they told them, you acquire the business from here itself, the business got incorporated over here, and then the settlement took place on 1/6/2013. Okay, so in this particular period Taj had to pay some amount of interest to the vendor, that is Brown and Smith, and that interest is given over here in this particular problem, and that is what the additional adjustment we have to understand in this particular problem, which is very easy. We'll go ahead with the problem. So let's move further. The following was the profit and loss account as prepared on 31st December 2013 for the year ending on that date. Okay, see, always remember, to solve the problem we require time ratio and the sales ratio. Apart from that, then we require the gross profit. So we have the gross profit here. I just write here gross profit, which is 20,000, right, given. So I just write here 20,000 gross profit. Now the next thing we have to look at the expenses. All the expenses are given. See, expense of management, bad debts, directors fees, interest to vendors. Now this is where the adjustment lies, interest to vendors, right? Then preliminary expenses, depreciation, and net profit is given 13,000. Let us move further. It was found that on bad debt written off ₹100 relate to debts taken over by the company, and a portion of the profit between prior and subsequent incorporation, assuming that turnover is spread evenly over the year. Now let us try to understand what exactly they are trying to tell us. They said bad debts written off ₹100 related to debts taken over by the company. Let us check the bad debts amount. It is 200. 100 is taken over by the company. That means 100 balance remain will be given to the pre-acquisition period. Okay, so if bad debts adjustment is not given, they will directly tell you what amount belongs to the pre, what amount belongs to the post, or what amount belongs to the company. If they don't tell you in the adjustment, you have to apportion it on the basis of sales, considering that it was a credit purchases. Okay, so we have done with this adjustment. Now apportion the profit between prior and subsequent incorporation, assuming that turnover is spread evenly over the year. Means for all the months the turnover was same. So now let us start solving the problem by first finding the time ratio and the sales ratio. Okay, so I write here time ratio and we move on to the problem. Time ratio will be 1:4, right? 1st January and 1st of April. Here there is a gap of 3 months, and yes, post incorporation there will be a gap of 9 months. Okay, what we have to do with the settlement date we will see later. So first I will write time ratio 3:9, then coming to 1:3, and the sales ratio. Sales ratio, if you go here, apportion, what they are saying, turnover is spread evenly over the year, means for all the months the sales were same. So we can say that the sales ratio was also the same, that is in the ratio of 1:3. Okay, we can use the same ratio as time for the sales ratio. Why? Because the turnover is spread evenly over the year. Okay, now let us move on with posting our expenses to the profit and loss account. Okay, this is the pro forma I have for profit and loss account already drawn for you all. So the first thing I will do is by gross profit. By gross profit, basis will be sales, as we all already know. 20,000 I have to bifurcate this on the basis of the sales ratio, that is 1:3. So when I bifurcate it, I will get the amount as 5,000 and 15,000. Okay, I will now include all the expenses except for interest through vendors. Okay, so based on the expenses that are given over here in the profit and loss account, I have posted all the expenses on the debit side and bifurcated them or apportioned them into pre and post incorporation period, except for interest to vendors. Why? Because for this particular purpose we need to find a separate ratio which will belong to only for a period for which the settlement was done. So for that, let us move on to this basic information that is given. See, 1st January 13 till 1st of April 13 we had 3 months, and then 1st of April 13 till 1st of June 13 we had again 2 months, right? So till the settlement period we had total 5 months. So the interest that is given in the problem over here, see, interest to vendors, this 1250 is to be bifurcated with the help of this ratio, that is the ratio of 3:2. Why they are doing this? They are saying that in this settlement period, this first settlement period of 5 months, there are 3 months of pre-incorporation period and there are 2 months of post-incorporation period. And no way are you supposed to take this particular expenses after the settlement date. So till settlement, listen carefully, there were 5 months. Out of these 5 months, 3 belongs to the pre-incorporation period, 2 belongs to the post-incorporation period. With this information, we get this new ratio, and on this ratio, you are supposed to bifurcate your 1250 rupees. Okay, so on this ratio, if I divide, I will find 750 and I will find 500. Right? This 750 will go to pre-incorporation period. This 500 will go to post-incorporation period. Okay, so I will write it here. Interest to vendors based on the adjustment given pre-incorporation period 750 and post-incorporation period I will write 500. Okay, so I will now total this column, pre-column, I will total post column, and I will check it with the credit side. Okay, so I will just write here capital profit, and I will just write here net profit, and I will total it, and I will check the balancing figure as to on which side it appears. Okay, after totaling, I found out that the credit side was heavier, so I have got this capital profit as 3,138 and this post incorporation profit, that is the net profit, as 9,862. Now if you total both these amounts, it should match with your net profit of 13,000. okay, then you can say that your problem is correct. Okay, just to close, I will write here 5,000, 15,000, and I will write here 5,000 and 15,000. okay, so what additional things we have done in this particular problem number 2 is the adjustment with respect to interest to vendors, and we have found out how to find the ratio, separate ratio to apportion the interest to vendors. okay, how we find the ratio. okay, this is what we have learned in this particular video.